You got to pick a direction. So right away, you got to learn how to do some analysis. Then once you get correction or the prediction of the market right, you got to learn how to manage your money. You got to learn how to take big winning trades and small losing trades, not risk too much. There's a lot of moving parts to being a successful investor. It takes a lot of time to learn. Now, one of my clients, after I had gotten good at trading, I started teaching it probably 5-6 years after that whole fiasco. He came to our office and he said, "Hey, Ron, I just want to thank you for, teaching us this analysis, and I want to show you what we do." I said, "What do you mean by what we do?" He's like, "Well, I work for a hedge fund. We have a $600 million fund, and this is what we do with options. This is what the institutionals do. This is how we trade this kind of stuff." I said, "Well, I've had a bad experience with options, but I'm willing to listen." So another long story short, he showed me that being able to sell options was basically taking all the guesswork out of your trading. Because no longer did I have to get market direction perfect. If I thought a stock was going to go up or a market was going to go up, I could choose an option trade that would profit even if it went against me. He showed me, hey, you see where your stop is and you're losing money? I'm still making money because of the way I set this options trade up. My analysis, Ron, is no better than yours, but we make probability with the options trade. And that was like astounding to me. So I kept that in the back of my mind, and eventually, again, long story short, decided probably about between 12 and 13 years ago at this point, maybe it's even longer than that, to transition into becoming more of an options trader because, hey, I want to do it like the institutions do too. And the other benefit about being an options trader, especially the way we do it for income, is you don't have to worry about money management as much. The trades are money managed themselves. They give you the max profit. They give you the max loss. You don't have to think. Imagine the pressure that takes off of you. It really does help. So what I want to do is I want to try to take you through that same journey today. I want to show you what he showed me, the key strategic shift that helps you become an income trader. An income trader can make money even if they're wrong. So I want to talk about that today. But then more importantly, I want to show you how to do this with very, very little risk. Okay? You're going to learn the big mistakes that people make and learn how to trade with very, very little risk. And again, this risk is lower than if you just buy or sell stocks. And then I'll wrap it into a bulletproof system that you can use in as little as 15 minutes a day. And don't take my word for it. Take the clients who've done this. I've got a lot of stories coming that you're going to see here in the next 45 minutes. Now, stick around to the end. It's got a lot of good information, but I'll also at the end give you a checklist that'll help you plan out your income trades. It's a PDF. We'll put it right in the handout section of GoToWebinar, and we'll drop it right in there. So make sure you remind me when we get to the end to put that PDF in there for us. All right. Now, why is this such an important topic? Well, to understand why it's important, I'm going to ask you a question. Why do we work in the first place? If you surveyed 100 people and asked them why they go to work in the first place, you're going to get a lot of responses. A couple of them like contribution, sense of achievement, gives my life purpose. But at the end of the day, I bet the overwhelming answer to this is for the paycheck. The paycheck enables us to live hopefully well today, and then put enough away so we can retire. We don't have to work. But the hard truth is, without a system to help you generate the income you need, you're basically stuck trading your time, or in this case, your life, for money. In other words, without an income system, it's on you. And it creates a number of problems for us. It keeps us working if you're not retired. You're stuck in a situation of working to live. You're trading your time or your life for money. Now, whether you've got a lot of money or no money at all, concerns about finance are one of the leading causes of stress. Whether you'll have enough or you're going to run out of money, that has a huge impact on your life, your health, and even our relationships. In other words, we can't stop until we have enough, but we don't really know what enough is. So we just keep working and working and working, just like the hamster on the wheel. We're taught to work for some future event called retirement when we can finally stop working so hard and enjoy ourselves. But in my opinion, working to save enough for retirement on its own is not really the best approach. Because if you're already retired, you might be watching your savings get depleted faster than you can fill it. If things don't improve, you may feel you'll have to give up on the investing side and go back to work. Worst case scenario, during retirement, you might run out of money, or your standard of living will drop and you can't live the lifestyle that you want. But with a system that helps you generate income, things are a lot different. And I think this is probably one of the most important points of the webinar. So pay attention here and even write down what I'm about to say. In order to become financially free, our main need is income. This is why most of us spend the majority of our lives working for a paycheck. However, in order to become financially free, all you need to do is learn to generate enough income from your investments to cover those expenses and lifestyle needs. So, one more time. In order to become financially free, all you need to do is learn to generate enough income from your investments to cover your expenses and lifestyle needs. Now, whether you're still working like I am or retired, like I know some of you are, the ability to generate income from your investments is really one of the most empowering skill sets you can have. Now, let me be clear. I'm not suggesting you take our course and go out and quit your job. But when you have that ability to generate income from your investments, your life will change. If you're still working, you're going to add even more earning capacity. It's like having a second job. If you're retired, you can have that consistent source of income like you still have your job, but you don't, right? You quit, but they're still getting a paycheck. It's like a tap you can turn on whenever you want. That's going to allow you to do things you want to do now for those of us that still work and when we retire. And that's why today's webinar is important. When you've got a system to help you generate income, it can help you retire sooner. When you're retired or when you're still working, you can live a wealthier life without depleting your nest egg. And as I said before, this is one of the most important aspects here. Let's say it one more time. When the income from our investments exceeds our living expenses, we become financially free or have the ability to retire. In my opinion, learning how to generate income is far more important than how much we earn in our jobs. We work to generate income. We can stop doing it when the income from our investments is enough for us to live. And you'd be really surprised in how little it takes to start doing something like this. Brian is a client of ours. He's a great example of how easy you can become proficient at income trading with the market, even if you don't have a lot to begin with. So Brian had some health problems, and he said he needed a way to supplement his income. By using the paycheck system, he was able to generate $23,000 in profit, and he started with only $6,000. He had a 100% winning trade rate in 10 months, 31 for 31 on winning trades. Now listen, it's not beginner's luck. It's the result of following a good system. Okay? Now, the first thing you need to do to take control of your returns is a bit of a strategic mindset shift. You're either going to continue being the gambler where you lose more than you win, or you're going to become an option seller and win more than you lose. Being an option seller is the way that you can make consistent income each month, and that's what lets you win or make money even when your analysis is wrong. Now, the reason you want to be the casino, or if you will, remember we talked about the gambler? The reason we want to be the casino and not the gambler is that the house always wins. And the second thing is they win for one specific reason. They control and stack probability in their favor. But they still make a fun game for you, right? That's the key. Now, the options paycheck system is built around the same concept, stacking the odds massively in your favor. So make a note of this. In order to control your returns and results, you need to know how to stack probability in your favor. The house always wins because that's what they do. So, the obvious question is, how do we do it? The first step, shift from being the buyer of options to being the seller. Let me explain. Bruce, by the way, is a great example of shifting from gambling on stocks to being the casino. Okay? Controlling and stacking probability. Prior to working with us, he said he had mainly taken stock tips from brokers. But Bruce focused on our S&P 500 income system, which is our basic trading system, as he said he's not the most technical person in the world. But in the time he's been working with us, he's grown his trading account by 100 from $100,000 to $497,000 in 3.5 years. He said he's achieving a 74% win percentage simply by following the rules of the options paycheck system, and the whole system, and this is his words, takes him around 15 minutes a day. So let me show you how this works. This is an example of a typical trade you've been taught to make. You find a stock that you really like, you think it's going to go up, so you either buy shares of the stock or maybe you buy a call option. Now, why do you buy a call option? Because that's the most basic options trade there is. A call option gives you the right to own the stock. And if you think the stock's going to go up, obviously you'd want to own it, right? It's a basic thing. It's not a bad trade, right? But what happens a lot of times? You get something like this. Either the stock doesn't go up, it doesn't go up enough, and that call you bought ends up expiring worthless. Has that ever happened? Well, remember I told you I had a bad taste in my mouth early on about options trading? This is one of the reasons. Well, what's causing the problem? Why are we losing? Well, most people feel that maybe they picked the wrong stock. Maybe it was the wrong strike price. Or who knows, maybe they picked the wrong expiration. But the real problem, let's talk about that. If you've been losing money or had more losers than winners with other systems, it's not really your fault. It's because most of the systems on this planet teach you to be on the wrong side of the trade. You're taught to buy an option. But as a buyer, the probabilities are not on your side. And for most people, they end up buying and losing and buying and losing, buying and losing, right? Mouse chasing its tail, dog chasing its tail. If you want to break that, you need to do what we call a new way of thinking, the options paycheck system. You need to be a seller and not a buyer. That's how you get ahead of everybody else. That's how you can put probability on your side, and that's how you win even if you're wrong. So let's take a closer look at selling options and see how it works. As a buyer, a typical trade gives you a 50-50 chance to be a winner. And I'm talking pure statistics here. Because when you buy, the only way you make money is if the stock moves in your direction, right? This stock's about $205 a share. If I buy it, it's got to go up to make money. If it goes down even a penny, I lose. But instead of having that buyer's mentality, you're going to have a seller's mentality. Instead of hoping the stock only goes up, as a seller, you're going to strategically set up your trade using probability. Probability tells you where the stock is not likely to go. So instead of saying or needing the stock to go in your direction, we can basically pick a price down here that says, as long as it stays above, in this case, 195, I can still make money. Think about that. We think the stock will go up. If it does, you make money. But just in case the stock goes sideways, you still make money. And if it goes down but stays above 195, you still make money. Now, what happens if it goes below 195? Well, you take a small proportional loss. That's it. It's not some terrible thing. It's like when you buy a stock for $200 and it goes against you, you have to sell it for 198. You take a little bit of a loss, right? It's the same thing here. The only difference is we're adding probability. Now, in some certain options conditions, we can even stack this base probability even farther in our direction, right? Now, our trades, a lot of them start at 70% accuracy. This is an example of that. Now we're picking a price at 190 that says, hey, if the stock goes up, we win. If it goes sideways, we win. But if this $205 stock stays above 190, we will also win. And if it falls below that, we take a small proportional loss. That is how you put the probability of success in your favor. This is the definition of an income trade. Simply put, an income trade is where you can make money even if you're wrong on direction. Now, I want to introduce another client, Mike. Mike was somebody who dabbled with options but lost on each trade. Have you ever been there? I did. That's why I had a bad taste about options. Can you imagine how frustrating that must be to lose on each trade? I know how that works. Eventually, he said options are not for him, and he obviously needs to go back to the books. Well, he tried to learn more about options, but he said he never felt comfortable. He didn't know what he was doing, mainly because he had no set criteria. So Mike and I worked together. I taught him the options paycheck system of being an option seller, and he became an income machine, he said. After learning the system, he went out and said he had 17 out of 19 winning trades with a profit of over $12,000 in 4 months. The key lesson here is this. He went from buyer or gambler to seller, and he immediately turned his situation around, just like Bruce did, just like Brian did. He was even so proud of his success, he sent me the spreadsheet of his trades. So here's his results. Number one, notice the amount of profits on each trade versus the losses. Okay? And then take a look at the days to close. This is not a day trading thing. This is like a 7 to 10 day typical trade length. Every 7 to 10 days, and you're going to see some that are a little bit shorter, like 2 days and things like that. You're going to see some ones that are shorter, but the average trade takes about 7 to 10 days, and he's pulling in about $1,000 every week, week and a half. Now, our most basic system which just trades the S&P 500, has averaged over 85% winners. You're placing trades that have a high probability of winning. Think of it like this again. Instead of being the gambler who's losing, you're going to be the casino where the odds are stacked in your favor on every trade. Now, a good baseball analogy that I like to use. We're not looking for the home run. We're going to be that second baseman, the shortstop, that hits 350 and gets on base a ton. His on-base percentage is huge because getting on base leads to runs. Runs win the game. Home runs look good, but those guys getting on base, that's what's driving the winning and losing. That's what we do as income traders. We look for those singles. High average. We make money a lot of the time for average. Okay? All right. You've seen by simply flipping from the buyer to seller. All right? You saw it on the graph. You saw Bruce. You saw Brian. You saw Mike. Immediately switching from buyer to seller, they flipped the switch and became profitable. Now, what we're going to do is we're going to stack those odds even further in your favor by understanding and capitalizing on the three most common buyers or gamblers' mistakes. So, the first mistake that option buyers make is they choose unrealistic strikes. They choose strikes that are so far out there, they have so little chance of making money. It's like this guy trying to mow his field with a push lawnmower. Yeah, I can do it, but it's not the right tool. Here's the stock. Let's say somebody was bullish on this one, right? So if you're bullish, what do? You buy a call, right? But what a lot of buyers do is they go way, way out far from the price. The stock's at $217. They go way out here to $230 and they buy a call. Why? Because they're cheap, okay? Because they're cheap, people have this idea of, I'm only spending $10, but I can make $1,000. You know what that is? That is what we call the lottery approach. Most option buyers treat these things like lottery tickets, and most of the time they end up losing, okay? Since there's always going to be those buyers out there who buy these options, we may as well be the one who sells it to them. You're selling an option that has a low probability of getting hit. Now, what I mean by getting hit is simple. The stock is at $216. I feel it has a very low chance of hitting 230. And it does. Statistically, that might be a 10% chance of hitting that price. Because he has such a low percentage chance of making money, I have a high probability chance of winning. Now, the same idea goes for puts. You got people who will buy puts way underneath the stock price. Maybe they think the stock's going to go down, so they go down here and buy a $200 put. If the stock goes down to $195, great, they might make money. But that probability down there might be only 20%. They have a 20% chance of making money. We have an 80% chance, okay? Now, since there's always going to be those buyers out there, now some people buy those options down there on the put side to protect their stock purchases. Awesome. They don't want to make money on the option. They just want to make money on their stock. It doesn't matter why they're doing it. Just know that they will. And when we sell those options to them, that's what gives us our 60 to 90% chance of success. Now, the second mistake that a lot of option buyers make is when they choose their expirations. They tend to choose expirations that are very, very close, right? A good analogy for this is this picture. You go to the grocery store, you look at steaks, right? You see a steak that expires tonight, it's half off. But you take it home and put it in the fridge for 3 days. You go to make the steak, it's all brown, nasty, and it expired. You just wasted your money. You should have bought the steak that expired in 2 weeks. That was double the price, and you could have eaten it tonight. Options are the same. Options have what's called a time value. And over time, no pun intended, that time value starts to decrease. And as it gets closer and closer to expiration, which you can kind of see on this graph, right? All the way on the left is the time value 6 months away. It's about 70 cents, we'll call it. And then all the way on the right is down to no days to expiration. And what you can see is how that time of an option starts to wither away. The value of that option starts to wither. And then finally, in the last 45 days, that decay becomes what we call exponential, right? It took basically 135 days for that option to lose half its value. Then in the remaining 45, it lost the rest, all right? So it expired or decayed at basically twice the rate, even 3 times the rate as it gets closer. Now, a lot of buyers buy options in that window because, again, they're very inexpensive, right? But what happens a lot of times? You have a stock like Home Depot, and let's say you're bullish on Home Depot. I'm talking back from like March 1st, right? You think the stock's going to go up. So what do a lot of people do? They go out a couple weeks and they buy an option. They use an expiration that expires in like 2 weeks. Or maybe they go out even farther to like a month and a half, right? But the stock basically stalls. And when the stock stalls and even went up a little bit, that time decay is in that exponential decay. Even if they're right on direction, that time premium is melting away and it's costing them money. Okay? The wrong expiration. Time decay as an option seller works for me. And there's always going to be people out there doing this. Expiration date's too close. We're going to be the one who sells them those options. We're going to be the enablers, I guess you could say, if you want to make it a bad thing, right? We're really just going to be the casino. They've got their trade ideas. We've got ours. We're going to put probability on our side. Now, the third mistake, and this is an important one. So if you're an option trader, pay attention to this. A lot of people don't recognize this one. It's they buy expensive or overpriced options. Let me show you what I mean by this. On this picture, you have two stocks. They're both right around the same price, within 10 cents of each other, right? 76 and 76. But even though they're the same price, look at the value of option premium. Over on the left, that's a $900 option, $910 to be specific. Over on the right, it's $180. Same expiration day, same strike price, same price stocks. Why is one basically 4 times more expensive? It's because of volatility. When volatility goes very, very high, option premium gets really, really expensive. Okay? Now, why is that important? A lot of people don't care about that, right? I got money. Who cares? It's only $900. I got $1 million account. It's not about that. It's about this. Let's pretend that both stocks go up $8 a share. Okay? You bought 100 shares of each of those stocks. You just made $800 a piece. Good job. But you want to use options because options are awesome, right? They got good leverage, they're limited risk, all that great stuff about buying an option. You picked it, you got the direction right, and this is how your trades worked out. Over on the left, you actually lost money. You picked the direction right. You picked the expiration right, but you didn't pay attention to premium. And even though the stock moved up $8, you walked away from that trade as a loser. Whereas over on the right, you turn that $200 basically into $1,000. You made $720 on that option. Okay? That doesn't include the price of the option. So you made $720. You basically got a 400%-ish return easily. And the reason why? Volatility. So what we're going to do is we're going to find these expensive options and we're going to sell them. The reason that we seek out these overpriced, expensive options is the more premium that we can sell something for, the more money we can make, and the least amount of monetary risk. It's a beautiful thing. So we're going to seek out those high, expensive options. All right. I want to bring in another one of our clients, Bob. He's got one of the more interesting stories I've seen. He was a fun guy to talk to. Prior to working with us, Bob was making a bunch of the mistakes we talk about, and it said it cost him dearly. In fact, he said he ended up either broke or bankrupt 3 times. In his own words, came close to living under a bridge. That's why he's kind of a funny guy to talk to. He said the Options Paycheck system turned his situation around in 4 months. He learned how to turn those mistake liabilities into strategies that help him control and stack probability. In 4 months, he said he grew his account by 71% and achieved a 79% winning trade percentage. Listen, in order to do this, in order to control your returns and results, you need to know how to stack and control probability in your favor. Now, this is where I turn it over to you. Get that chat window ready. Let me ask you a question. Have any of you that have traded options before made those buyers' mistakes? Just type yes or no in the chat box. I'm going to take a drink of water while you guys do that. It gives me a little chance to rest my voice. All right, I see lots of yeses. Aaron, Genesis, Scott, John, Frank, Mark, Adrian, Lance. Again, I didn't I'm not going to get a chance to go through all of them for time's sake, but yes, we've all made those buyer's mistakes, myself included, by the way. That's how I know these are mistakes. Now, listen, it's not your fault. It wasn't my fault. I was just taught a broken system. So, hopefully by now you realize the power of being an option seller. So let's look at how to trade with very little risk. And this is important because when new traders hear the terms options, and especially selling options, they think it's really risky. The paycheck system uses a low risk strategy for selling options, and it's why it's a core strategy that we teach all our retirees. Now, why is reducing risk so important? This is the big elephant in the room. Most people who don't use the options paycheck system aren't preserving their capital. They may have one bad trade wipe out the gains from a bunch of winners. I'm going to take a second on this one. I've never had that happen to me. Never. I've never had that happen to me. Not because I'm some super trader, although I'd like to think I'm a pretty decent trader. You know how I avoid that? I don't take trades where it's a possibility. Don't take a trade where one losing trade will wipe out all your winners. That's the cool part about options. You know it all up front. Don't do it. Because if that happens, it makes it very hard to recover your losses. A long time to recover. When you do it right, with the right system in place, you're going to have a built-in protection plan. You're going to take care of risk management even before you open the trade. And when you can select stocks and set your trades up in a way that reduces risk, it allows you to focus on the number one goal of investing, preserving and growing your capital. You know, I said earlier that home runs look good, but those home runs require you taking risk like that, where one bad trade wipes out a bunch of winners. You don't want that. We want the singles. That's what wins the games. Okay? One of the most common questions that we get about this are, hey, can I trade this kind of style in my IRA? A client of ours, John, grew his IRA over 112% in 1 year using our paycheck system. He tried and struggled. Hang on one second. I got a little error message here that I need to clear off my screen. Okay, there we go. All right. John said he tried and struggled with trading for some time before working with us. And he said he learned to follow the system and turned his inconsistent results into predictable monthly income. In 12 months, he said he had 85% winning trades and more than doubled the size of his IRA while spending no more than 15 minutes of his day trading. That's it. 112% ROI, 48 grand, 85%. Now, the options paycheck system makes sure you reduce your risk in your trade even before you open it, okay? First, we choose stocks that are very low risk. We have a very specific criteria, but in general, if we're bullish, we start by focusing on good stocks that are rising in price, something similar to what you see here. Then, instead of selling options naked, okay, we are going to sell with protection. Let me show you how to do that. Now, a traditional, hang on one second, folks. I got a little issue here in my office. All right. Sorry about that, folks. This is the peril sometimes of working from home. I had some guy pounding on my door, and I'm like, dude, get off my porch. Okay, no, I'm just kidding. But seriously. All right. Traditional option selling systems leave you with all this risk down here, right? Because if you go into a trade and then all of a sudden the market completely turns against you, what happens? You think that you only have $1,000 at risk, but the market has this big, huge move, and the next thing that happens, you're down $10,000. That's not good. What we need to do is implement our paycheck system, which shrinks your risk down to this. So let's look at how this works. This is a graph of a typical stock we'd be bullish on. It's a beautiful graph. It's understandable to be bullish on a stock that looks like this, right? Traditionally, people would buy the stock here, right? They may even buy a call because that's what you do as an option buyer, right? You buy a call. But you're a seller now. You're not going to do that. When we have a bullish market, we are going to sell a put that has at least a 60% chance to win for us. Options have probability built into them. We are going to pick one that has at least a 60% chance to win for us. Now, if you reconcile that with Ron, you said 70%. When we start putting the stocks together properly, looking for the right patterns, we get that to 70%. That's the beauty of it, right? Now, when I sell that put, they pay me. In this case, I receive $200. If I sell 10 puts, I receive $2,000. But that leaves me with a lot of risk. If that stock goes way against me, my $2,000 that I could possibly make could turn into a $13,000 loss. That's not acceptable. Okay? So what we need to do, there's no downside protection. We need to use a built-in protection plan. You're going to buy a put right below the put that you sold. Okay? It's going to be an insurance policy. That's going to limit your risk just to that. Now, we're going to spend some money. It's going to cost us here. We brought in $200 when we sold the put. We're going to spend $100 of that to buy our insurance policy. Okay? But again, you've reduced your risk. Now, in this case, this trade, you get paid $100 to do it. If you do it on 10 contracts, you get paid $1,000 to do it. All right? So the beauty of this is, again, you now have a trade that is fully protected that has a 70% chance of success. And you can make up to $1,000 on this trade. Now remember, why do we do this? We do it for one reason. Because it gives us a chance to make money if the stock goes up. We can still make money if the stock goes sideways. And we can still make money as long as the stock stays above 135. Okay? It gives us a chance to win even if we're wrong. So let's do this. I want to give you some examples of some real trades that I took. Now, before I do that, I want to talk a little bit and have you guys understand. Number one, okay, options have a probability built into them. If you were to go right out here at $312, actually, let me do this. That's a really crummy ink color. Let's use red. If you were to go out, remember how I told you that if you went out there and bought the stock or bought a call, you have a 50-50 chance of success? Well, here's what happens, okay? As we go down, our percentage of success increases. If I sell an option, let's say right here, that may give me a 55% chance of success. If I sell an option down here, that may give me a 65% chance of success. If I sell an option down here, it may give me a 75% chance of success. If I sell an option down here, it may give me an 85% chance of success. If I sell an option down here, it may have a 95% chance of success. Now, what I want you guys to do is get into that seller's mindset. But before you get into the seller's mindset, okay, here's what I want you guys to understand. When I ask you guys, and I understand that you don't know how the probability works yet, you don't know what mechanics or analytics we use to find probability, not yet, but here's what happens to a lot of traders, and this is why they use that lottery mentality, right? The first thing that your mind says is, Ron, I want the most chance of success on this trade, so I'm going to go right down here at 95% probability. And listen, I get it. The mind works that way. But here's the problem. If you put too much probability in your trade, you're going to have one of those trades where you might win on the trade $50, but if that trade goes against you, you're going to lose $1,000. Okay? Now, you tell me, if you took that trade 10 times and you won 9 times, you just made $450. But that one loser that comes in there, it wipes out all your gains and more. That's why probability, you got to keep it in check, right? What I'm looking for is something in the neighborhood of a 60% probability, but then I'm also looking in the neighborhood of maybe a trade where I risk $500 or I make $500, but I'm only risking maybe about $500. Okay? There's got to be that compromise. You can't build a trade with too much probability because the risk is too high. You want to put just enough probability in your trade that the management works out. So you're not having those trades that blow out all your wins. All right. Now, knowing what we just talked about, I want you to get into the seller's mentality. The stock is $310 a share. I want you to say, okay, Ron, we all know that Goldman Sachs is going to go up. What do you guys think? We want it to go up. What's a good price below Goldman Sachs? Where do you think? And again, this is just an exercise to get you into the seller's mentality, okay? I don't expect perfection here. What price underneath Goldman Sachs are you comfortable drawing a line in the sand? I think it's going to go up, but as long as it stays above this price, what do you guys think? All right, $295. John, $295. $295. A lot of guys are $295. Haha, Dev, I hear you, buddy. $280. All right, $300, Ed says. All right, so it looks like, and I can't read all the responses, most of you guys are in this kind of area right here. And that's I probably led you to that area. And I did it for a specific reason, by the way, because that's pretty much where I put this trade on. I did that trade earlier this year. When I sold the $300 put and simultaneously bought the $290, I got paid $157. I did that on 5 contracts, and I got paid $785. Now, here's what the trade did. The trade went up for the next 8 days. Okay, the market went up. It did exactly what I thought it was going to do. The stock only rose about 4%, but you can see here from my Thinkorswim account. On February 16th, I entered into the trade at $12.35. I got paid, and if you look at right here, here's where it is. I got paid $157. $1.57 in the option world, it's $157. I got paid $157 times 5 contracts. Now, just like any other trade, right? You're going to get into the trade and you're going to get out of the trade. I got out of the trade 8 days later for 79 cents. Now, it's a little bit of a mind work here, right? If you were buying this thing, you want to buy it 79 cents and sell it for $1.57. We're sellers now, so it's the reverse. We're going to enter at a high price and we're going to exit at a low price. And that trade took 8 days. And that's the profit I looked for. It's basically about 50%. Now, let's move over to our next example, Tesla, which, by the way, I just put a Tesla trade on today. I did another Tesla trade as it was breaking through. I think I did it like 1090 or something like that. But I put a Tesla trade on today. And then after I did the Tesla trade, the stock still shot up like $30 a share. It was ridiculous. Tesla. This is from fall of last year. Nice uptrend over the year. So understand, we're looking for stocks that are moving up over a long haul here. And then also, it had just broken that previous high, which I really like. So Tesla at the time was $525. Again, I want you to get into the seller's mentality and pick a price. This is $475, this is $450, $425, $400. Don't get seduced by probability. It looks great on paper, but when you have one losing trade that wipes out a bunch of wins, you're not going to like it. All right, John, you were first at $450. I see a couple other, Carmen, you're at $495. I saw like 3 or 4 other 450s right in that neighborhood too. Carmen, $495. Mark, $475. $485, $485. $495, Claude. Dev, $475. $500, Genesis. All right, cool. So, now listen. From what you all know right now, none of your answers are wrong. It's not about you picking an extremely perfect option to do this, and that's not the point of this exercise, remember. The point is, you think the stock's going to go up, and you guys are all smart, and ladies, smartly picking prices below it. That way, if the stock goes up, you make money. Sideways, you make money. Down, you make money. So none of the answers you're giving me are wrong. They are exactly what the mindset I want you to get into. Now, when it came to the real trade, I ended up doing this one at $485. Okay, so Tesla was at $520, and as long as it stayed above $485, I was able to make money on this trade. And I made $880 on that trade in only 2 days. 36% return on my investment, even though the stock only rose about 7%. Okay, I got into the trade on November 23rd. I got paid $1.95 times 8 contracts. I exited on November 25th, and I paid 85 cents. So I made $1.10 on that trade. Okay, in only 2 days. I had a trade like that on NVIDIA last week where I got into the trade Monday afternoon, was out Tuesday morning first thing. Heck, I made a trade on the S&P, I think it was last week or the week before, where I was in at 9:30 and I got at 11:30 with profits. All right? Now, another client I worked with was Jim. And prior to working with me, he told me his results were inconsistent and he felt unsatisfied. He kept thinking there may be something else out there that had to be better. Have you ever felt that way? Something more out there? Jim said he wanted a way to supplement what he was doing and will provide more of a regular income and had high probability. Now, flipping that switch, right? Going from gambler to casino. After learning the system of being an option seller, he went out and he said he had 21 winners in a row with no losers. He said he knows the losers are going to be there eventually, but he knows how to handle those. 76% return in 8 months, and his average trade, 8 days. That's the idea. Now, that was Jim. What about you? Oh, I want you guys to give me some ideas in the chat window. Do this. I want you to go back and think about what you've learned today from some of, not from the charts, but from our clients. Brian, Bruce, Jim. What about these guys? Mike, all these guys, they were able to flip a switch and start producing income. How would your life, what would you be able to do if you were able to reproduce their results? What could you do? Retire early? Get a country club membership? Buy a new Tesla? Think about it. What would that allow you to do? All right. You know, the big thing, not worry. I love that one, Claude. You mentioned peace of mind, Ralph. Yeah, definitely. Pay off a 30-year mortgage faster. John, you and I are on the same page on that one. I'm still only 45 years old, so I got a lot of time. Buy a house, Genesis, I love that, especially with the house prices now. My wife and I joke that if, we bought our house almost 4 years ago. We joke that if we had to buy it today, we probably couldn't afford it. We couldn't afford our own house again. So, yeah, we know how that's going. It's just transitory, by the way. Don't worry. It'll come back. All right. I don't want to get too deep into that. All right. We said before that buying is gambling, selling is controlling risk, and putting the odds of success in your favor. That's how it's all about, right? That's how you generate income, putting the odds of your success in your favor. The paycheck system makes sure that you have a guaranteed maximum risk. It goes back to whether you'd rather be the gambler or the casino, because again, the house wins in the end. Being the option seller is how you create consistent income. Now, I showed you a bunch of folks that said they do this in 15 minutes a day. Why is that important? Well, a lot of the questions that I get asked are, Ron, how much time is this going to take me? I work a full-time job. I might not have time to do this. Or, hey, Ron, I'm retired. I want to be retired. I don't want to have a new job trading. It's a good question. And there's a challenge here, right? There's thousands of stocks out there. You got to find how to pick the right one, the right strategy. When do you get in? When do you get out? What expiration do you use? What statistics do you use? And with all that stuff out there, people say they can't find trades easily. There's so much information, they feel it's like finding a needle in a haystack. It takes a lot of time to parse through all that miscellaneous crud that the industry throws at you. You're going from guru to guru, researching trades, don't know what to do. You're ultimately like that mouse in the cage, right? Bumping into wall after wall. You don't know where to go. It's disheartening. It's stressful. But with the right system, you can identify good trades, get reliable income in as little as 15 minutes a day. And again, don't take my word for it. Take the clients that you've seen today. But to get it, you need a system, a straight line system, not just any system. A simple way to know when to place your trades, how to find your trades, how to set them up, and then how to manage them. So let me walk you through the pieces of the Options Paycheck system in the order they go in. No one else teaches option selling this way. This is like the secret sauce. There's 6 pieces, the top 5 build on each other, and then the 6th ties them all together. We start with market direction, okay? A lot of traders ignore market direction, just go out and place trades. You're going to be placing trades that are either bullish, bearish, or neutral, and you're going to be doing it in accordance with the overall direction of the market. Right now, for instance, all I'm placing is bullish trades. That's it. That's all I place. I did 2 bullish trades on stocks today. Nope, check that. 3 bullish trades on stocks today. Is a bullish trade on the SPX. All I'm doing is bullish trades because the market's bullish right now. Okay? You're narrowing your focus. You're only looking for trades that match the market direction. Whether it's the S&P, whether it's the VectorVest composite, you're matching things that move in the market direction. By doing that, it also helps you limit the stocks. We're only looking for stocks that are also moving in the market direction. We're not going to go from guru to guru or take our trades from IBD or anything like that. We're going to match our stocks to the market, and we're going to use two things to categorize our trades as good ones. We're going to look at fundamentals, things like earnings, and then we're going to look at the stock's trend. We're going to open up a graph and look at it. It's going to help us choose our stocks. Then we're going to see if that's a valid options trade. Remember earlier I told you that we looked at volatility? I want to find stocks that have high volatility on their options. I want to find things that are clear of earnings reports where they move big. I want to make sure I'm choosing an expiration that's in that sweet spot, right? That eliminates risk from the trade. Now I got to set it up. I set the trade up based on my probability. I want to put in a built-in 60% probability, right? How do you do that? By choosing the right strike prices that match up to that probability. And then most importantly, you have to analyze the trade's risk-reward impact. Remember, again, we don't want to take that one trade that wipes out 15 winners. You know all this up front, okay? Then we need a plan to manage and possibly repair the trade if it goes against you. This involves taking profits at the right levels, any adjustments or trade repairs to limit our losses, and when to exit the trade when it goes against you. And then finally, we kind of tie that all in together with tools that are for speed and efficiency. Now, we have a proprietary tool from VectorVest called Options Pro. It saves a lot of time. It's not mandatory, but it is a nice tool that's built for this. Okay? Something you're comfortable using. Brokers like Thinkorswim, IB, they all have great tools for this too, by the way. So it's not just like something proprietary. But there's a lot of paid services out there that you might like as well. All right, Hugh. I want to talk about Hugh. Earlier, we talked about Mike and Jim. They said they're getting the results in about 15 minutes a day, and so is Hugh. In fact, he told me one of his biggest struggles was finding a system that was efficient and worked. Efficient in time. He said he didn't have the proper balance between trading and free time. He didn't have that balance right then. Are you like that? Do you like spending too much time doing things you don't want to do and not enough time doing things you want to do? Now that Hugh learned the Options Paycheck system of selling options, he said he has more confidence, more free time. He's able to have more fun. In his first 43 trades, he had 38 winners, 27,000 in 4 months. All of these folks were able to implement and flip that switch immediately. It's not about luck. It's about trading with probability. Now, I want you to do this. Take this little assignment here. I want you to take a pen, and I want you to mark, not on your monitor, that's a bad idea. Mark where you are good at, right? If you're good at market direction, that's a star. If you're bad at trade setup because you're not really familiar with trading options quite yet, put a little frowny face there. This is the system that will lead you to income. I want you to grade yourself where you are, pass or fail, star for good, frowny face for bad. Grade yourself and find out where your weaknesses are, okay? Give you about 10, 15 seconds to grade yourself. Now, I'm willing to bet that maybe 1 in 100 investors will ever know how to do this. So let me ask you, what areas do you need to work on? Share with me in that chat window. Share with me on that chat window. I almost said share, like, and subscribe. It's funny. I have a 4-year-old. He'll be 5 next month, and he was telling us yesterday in the car. He's like, "Mom, Dad, I have to like, share, and subscribe, and then I have to check out blah blah blah.com for their merch." I'm like, "Oh, we're awesome parents. Awesome parents we are." Carmen, 2 through 6, stock selection. R. Paul said all of them. Ralph, trade management. Dennis, John, learning. John, you're learning. That's cool. We can work with that. Edward, number 5, stock finder. Claude. All right, cool. So like I said, this is all about finding where you are on the scale. Because if you want to be profitable, we got to get all those to stars. Okay? And we can do that. Once you get there, you'll be able to generate income and do it in less than 15 minutes a day. So I can't know the exact reason for coming to today's webinar, but I'm going to make some guesses. Maybe you've been trading blindly. You don't know what to do. You've been walking into wall after wall. It gives you inconsistent. It left you with inconsistent results, just like Jim did before he learned our Options Paycheck system. Maybe you've been suffering through loss after loss, and those small losses are killing your portfolio. Maybe the money coming in isn't exceeding the money going out. Maybe you're just not where you want to be. Now, today I showed you the secret to fix all that. And again, it's a secret that I bet only 1 in 100 investors will ever know. And now you're a part of that. You saw how it's possible to win even if you're wrong. To do it with little risk, even less risk than buying and selling stocks. And you saw the system that'll help you get there to that consistent income. I showed you just a few of the many people who use the system every day so they never have to worry about their retirement again. You saw over and over the secret to generating income is shifting from being the gambler to the casino. You're going to be that one investor out of 100 who knows that secret. That means there's 99 other investors out there who continue to do things wrong. They'll be buying options and making all the mistakes we talked about. We can't stop it from doing it. There'll always be those investors out there who buy options incorrectly. Let them be the gamblers. As long as they're out there, you might as well be the casino. Remember the old saying that the house always wins? The paycheck system teaches you how to stack the probability of success in your favor. Brian learned how to stack the odds in his favor, and he turned $6,000 into a $23,000 profit in 10 months. Bruce turned 100 into 497,000 in 3.5 years. Bob from broke to 71% ROI in 4 months. Jim, inconsistent to reliable, 21 winners in a row with no losses in 8 months. Hugh, more confidence, more free time, and able to have more fun, 26 grand in 4 months. John grew his IRA over 112% and enjoyed 85% winning trades. So if you're like most people, you're wondering, how do I implement this thing? How do I implement the system in my portfolio right now? Well, you got a choice. Option number one is you can do nothing and stay where you are. If you already have enough to retire and you're really not worried about running out of money, then you don't possibly need the paycheck system. But if you'd like to make some extra income every month, that leaves you with 2 other options. Option 2 is you can do it alone. You can try to learn how the options trades work, try to figure out the direction of the market, then learn to analyze thousands of stocks, find the best ones. Hope you pick the right one, manage it right. If you're willing to work hard, spend hours in front of your computer, and you're willing to learn by trial and error, you might be able to pull it off. Or then again, you could be like Mike and not be able to pull it off. But option 3 is to let us show you how to do it. I'll walk you through each piece of the options paycheck system. And in just a few weeks, you'll have a simple system to follow that doesn't take a lot of time. So ask yourself, of those 3 options, what's going to be the easiest path for you? You know, there's 2 types of people. Person 1 is someone who dreams about their financial goals but never takes action or anything to make it happen. Person number 2 is you're serious about your financial future. You're ready to take action when you see an opportunity in front of you. Since you're dedicated enough to be with me to this point, I'm willing to bet you're person number 2, and I think that makes you the perfect candidate to get started on your options paycheck. So let me tell you what we put together for you. First and foremost is our options paycheck course. It is a complete A to Z system designed to teach you the entire thing so you can generate consistent income each month. That way you can live that lifestyle you want without the fear of running out of money. Now again, I've shown you many clients who are taking this course that are making 3%, even more. Okay? They're doing it with a 70% success rate, some even higher, and it's taking them less than an hour a week. So we'll start in the options paycheck curriculum by showing you and building a strong options foundation. Some of you mentioned that you've never traded options before. You're going to know exactly how calls and puts work, and you're going to be able to confidently use them correctly in your trades. In modules 2 and 3, we're going to teach you the core trading ideas. You're going to know how to create these income trades that have that better than 70% success rate. In module 4, I'm actually going to show you how to find and what properties to look for in stocks. So I'm not just going to show you an options trade and say, hey, good luck. I'm going to show you the right way to pick your stocks as well. I'll also introduce to you how to use indexes to make this even better. Okay? In module 5, we call this the maximizer. This is about making sure that you're getting paid the most you can from the options. It's about also making sure you're not risking too much, maximizing your rate of return, risk reward, those kind of things. Module 6, we call that the trade management game plan. You're going to know how to exit your trades with profits, exit your trade for the proper loss, and how to adjust or repair trades if you want to minimize your losses. I will also teach you portfolio management, how many contracts you should trade based on how much money you have, how much risk you should be taking, how many trades you can have on at one time. Those are all dependent on account size. And then in module 7, I can't show you how to use every single broker on the planet, but what I can do is give you some of the common broker terms. That way you can take them into your brokers and say, oh, that's what Ron meant by midpoint or buy to open, sell to close. You'll know exactly what to look for in your broker. Now, one of what I think is probably one of the best parts about this system is it's what we call a mechanical system. There's no ambiguity here. There's no what ifs. There's no, there's a hard, fast set of rules. That's it. We put them into a checklist. As a new trader, you could run down this checklist line by line and follow the system perfectly. There is no ambiguity. It is all hard, fast criteria. It's either a yes or a no. That's what makes this easy. Now, before I talk about the price, I want you to understand that this is low risk. Here's how low risk it is. If you take the course, go through the materials, do some exercises with us, watch the videos. If you don't think that you've implemented a good income system, I'll give you your money back. Simple as that. Now, I'm not just going to give you your money back, by the way. We're going to make sure that you did some of the work, watch the videos, because I want to work with serious people who are willing to commit to this. So I don't want the, well, Ron, I signed up for the course, but I didn't do it. No. We'll work with you, don't get me wrong, but that's not a money back thing. Money back thing is, Ron, I did it, I should it, I still don't understand it. Or I don't think I can create income with this. All right? We'll work with you. But we do offer a money back guarantee. I set a tight refund policy because, again, I only want to attract serious people. Now, that income system, again, 3% per month, 36% per year. It doesn't take a lot of time to do it every week. Now, I love this email. It's a little over a year old now, but I love it. It was from Joe. Joe wrote to me in the email. He said, hey, Ron, I took your class last fall, so that would have been in the fall of 2019. And he wanted to let us know his results for the past 10 months. He keeps a journal to document every trade, and he had 239 trades out of 350 that were winners, 68% win rate, 100,000 in profits. He said, what's more exciting is that since my knowledge and experience have grown, he's profited over 50,000 in the last 6 weeks. His success rate has been 78% over his last 100 trades, and he only takes trades with 2 to 1 or better risk reward. Now, the reason I like this email, I have emails like this all over the place. Trust me. I've shown you guys this. The reason I like his particular was because he did this in 2020. 2020, a lot of people said it was one of the harder years to trade because of the coronavirus and all that stuff. He was able to do it in 2020. That's awesome. Okay? Now, if I would have went back to him in fall and said, hey, I'll give you $100,000 if you give me 2, he would have probably taken that trade, right? You would too, I'd imagine. But I'll be making you a much better offer than that, as you'll see. So before I tell you any more about it, I want to point something out. This is not a get-rich-quick scheme. It's not something where you should expect to become a millionaire in the next 24 hours. It's serious and requires effort. So if you can't commit to it, then don't do it. It's not for you. It's for serious people who would take their investing seriously and who are willing to put in the time to learn the system. So if you're serious about this and ready to do the work and get results, then the Options Paycheck course is perfect for you. You're going to get the entire course delivered to you live each week. Plus, you will get recorded sessions. So if you can't come to the classes live, don't worry. Everything is archived for you. You'll be able to follow along perfectly fine. Now, that has a value of $19.90. What we're also going to do is throw some bonuses in you. If you're worried that finding stocks are too hard, Ron, I work a full-time job. I can't really go through 3,000 stocks every day and try to find trades. Or I don't have the system. I don't have the software to do this. No worries. We're going to boil this down into an SPX paycheck, we call it. You're going to trade one trade on one ticker symbol. No, you don't have to go out there and look for symbols. One symbol, the S&P, that's it. One setup rule, one profit rule, one stop criteria. Okay? We actually just finished an income challenge where we taught people this SPX paycheck independently. And this was one of our students, Kathy. This weekend at 440 out at 215. Thanks, Ron. Another profitable week. Another one, Cherry. My 44.25, 44.35 bear call credit spread came to 50% profit yesterday. I think I'm getting this stuff. We took 5 trades with the class over 5 weeks, and we had 5 winners, 5 for 5. Alan, was really hitting it. He was doing multiple trades a week. He said he made $5,500 that week, and the week was not over, just on the SPX paycheck alone. So we've got systems in there, again, for those of you that want to focus more on one thing so you don't have to worry so much about, finding stocks. We're also going to throw in what we call 7 live mastery support sessions. And like the word mastery implies, these are basically sessions where we can get together and master the concepts week to week. We're very big on what we call implementation. We want you to be constantly implementing this as you learn it. The mastery support sessions will make sure that everybody is on track. Now, if you can't, again, view the live, not a problem. You can send your questions to our email. You can post them to our private Facebook community if you want, and we will answer those questions for you in that live class. You'll get a copy of the recording, and everything will be great. Okay? Now, we do have a private Facebook community. That's going to allow you access to me, my team. It's not the only way to get support, by the way. That's just one nice one, where you're going to be in a group with a lot of other motivated investors who are taking the course. All right? I know everybody has their own opinion about Facebook, or what's it going to be called, Meta or some crap like that. But listen, you can join Facebook anonymously through a burner email or something like that if you want to. You're Joe Q Trader, Joan Q Trader, all up to you. Okay? If you want to do it, great. If you don't want to do it, it's not a detriment to the system. But we do have that available for you. I mentioned that I took those trades of Goldman Sachs and Tesla in my coaching group. I'm going to give you 7 weeks access to my coaching group. That way you can see me implementing this in real time. I'm showing you live trades with my real account, not fake, and show you how I'm implementing this stuff week to week to week. Now, if you don't have any software to implement this with, we're also going to include the software we use, which is VectorVest. VectorVest helps you find stocks, helps you find market direction, and the Options Pro is a great tool to put the option trades together. They're not mandatory, but we do give you access to those because they are our products and they can help you, but don't feel that they are mandatory to make this work. They do make it a lot nicer, I will admit to that, but they are not mandatory. You can do this with broker software like IB, Questrade, Thinkorswim, Schwab, Fidelity, you name it, you can do it. Now, I've noticed that some of you said you were new to options. Just in case you're new, I also include a free streaming class called the Options Foundation course. So if you want to brush up on your options, hit the ground running when we start the live course, this is for you. You can start watching it as soon as tomorrow and get up and speed running before the live class starts. It's such a good program, even that little foundation, that we had a couple of our students in the last classes say, hey, I took my first 7 option trades in my life and made 5 winners and 2 losers. That was Shun. Bobby said he opened his first trade at the SPX and already paid for half the class. That was before the class started. All right, so quick review of the offer. You're going to get the Paycheck course live and through digital, SPX Paycheck, Mastery Support Sessions, weekly coaching and trade recommendations for 7 weeks, VectorVest and Options Pro for 7 weeks, Facebook group, 12 months of Q&A, Options Foundation course. Add it all up, $6,800. However, I'm going to roll up my sleeves. I want you to give me 7 weeks, and I will create an income system in your portfolio, whether you have traded options before or not. Okay? Now, you've spent about an hour with me, and if you want to join me and have me take you by the hand, I'm not going to charge you $6,000. We have a special early bird price right now for $9.95. If you go to www.optionspaycheck.com, there's a big orange register button in the corner. Sign up. Registration is closing very, very soon, and the price of this course goes up at midnight. $500, okay? So this is really your last chance to get that early bird price. I know $9.95 might be a lot, but how much is it costing you not to do this? How much are you going to miss out by trying to learn by trial and error? Okay? Think about how things would be different if you could do this and it works, like the clients I've shown you. You know, there's an old expression that the best time to plant an oak tree is 20 years ago, so you can be sitting under it now enjoying the shade. The second best time is now. It's not too late. Plant the seeds. 2021 is coming to a close. Get this income system put into your portfolio for 2022. Start producing income. It's not too late. Okay? You got a great opportunity to really start and really end the year on a bang here and start creating income. So I hope you don't regret the decision. Don't miss this opportunity. The price goes up after midnight. So right now, if you sign up, it is $9.95. Go to www.optionspaycheck.com. Big orange register button in the corner, upper right corner. Click it, hit it, like, share, and subscribe. No, I'm just kidding. Just click on register, and you are in. Now, by the way, if you are in, do me a favor. Give me a shout out in the chat box. Say, hey, Ron, I'm in. You don't have to say, hey, Ron. You can say, I'm in. That'll be just the same. My colleague Brian's going to come on here in a few minutes. We're going to talk about what happens next for those of you that are in. Plus, we want to see who we're going to be working with for the next 2 months. Now, I got a couple of questions that are always asked. And this first one, I never understood why this is such an important question that you guys have asked me. When are the live sessions? No, I'm just kidding. That's a very important question. If you want to sign up and you want to view it live, you need to know when the live sessions are. It's a good question. And what if I miss a live session? Well, first off, the class starts Thursday, 3 days from now, November 4th. Okay, I can't believe it's already November already. November 4th. That's when the class starts. It starts at 4:30 Eastern Time. This is where we teach Module 1. And then the following week, we come back on Tuesday at 4:30 and teach Module 2. Then we teach Module 3, 4, 5, 6, and 7. Now, all of our sessions have an archive. So, quite frankly, starting tomorrow, if you wanted to view all 7 sessions ahead of time, you could go out there and view the recordings for all 7 of our sessions. But we also teach them week to week live if you want to see them live. This course is intended to be a week-to-week live course, 1 module a week. That's when we teach the live modules. But we already have an archive out there, what we call our master recording for that. Now, on Monday, November 8th at noon Eastern Time, we do our first mastery session. Okay? You can actually view the recording of our mastery session that we did in last paycheck right now if you wanted to. But these are updated every week with new live mastery sessions from your class. So on Monday the 8th, I do my first live one. On Friday the 12th, I do my 2nd, 3rd, 4th, 5th, 6th, and 7th. Okay? Now, if any of you are a little nervous about, Ron, the teaching, how it is done, I got a good comment here from Bruce. Not the same Bruce from 100 to 497. This is a different Bruce. He said, I now feel confident to start placing trades. I know exactly how to monitor them, adjust them. This is exactly what I wanted. I would absolutely recommend this course. It was designed in a very orderly and clear manner, and it might be the best step-by-step course I've ever seen. And I've been teaching investing concepts for 35 years, so I think I'm a good judge. Well, I appreciate that. All right. Now, a couple of you might be wondering, how much options experience do I need? We were worried about that too. So we always poll the folks that go through the class. As of the last class, 83% of our course graduates said that you can be successful with little to no prior options experience. So the vast majority feel that you can go through this course without any options experience. Now, if you don't have any options experience, this is why we added that options foundation course. That way, if you're one of the 17%, we got you fixed up. You've got an options foundation course that you can go through. That way you can hit the ground running, so you will have a little bit of options experience. Okay? All right, so here's what we're going to do now. I am going to switch into our Q&A mode. I'm going to bring in my colleague Brian. Brian's been in the background answering questions. He will come to the forefront now, and we will do a Q&A. He will also tell you what comes next for those of you that are in.
Hello.
Hey.
Hey, Ron. Thank you for allowing me to come into the session.
You are welcome.
All right. And so first things first, for all of you who are in, welcome aboard. This is your cruise director. Great to have you on board. In just a second, I'll let you know what to expect, but I do see some people who are reminding us about that PDF. So thank you for sticking to the end here. I'm going to put that PDF into the chat box here. It's actually in the handouts area of GoToWebinar. Give me just a second. It takes a moment for it to upload. And then wherever you're typing to us in GoToWebinar, right above that, there's a section that says handouts. You will find it there, and it'll be a little PDF. Now, the first 6 pages of the PDF are a great recap of everything Ron was talking about today. So it's a great resource. And then I believe it's the 7th page is the checklist. So it's a nice thing that you can print out if you don't mind using some color on your printer, or you could just save the PDF to your desktop. So it's in the chat, it's in the handouts area. Enjoy it. Thank you for sticking to the end. So that Martin, thank you for reminding us. Philip, thank you for reminding us. All right. So those of you who are in, again, welcome. You should check your email immediately. Check your email. If you don't see it in your inbox, check your junk, your spam folder, because we would have sent you an email with directions to access the course, which, by the way, you can get into right now. You can get into tonight and start going through it. There's the dates and the times of the live sessions. There's the link to the Facebook group, give us about 24 hours to get you into that group, and then you could start saying hi to Ron and saying hi to John and the team, plus all your fellow students. Well, I shouldn't say all of them, the ones who decide to join the group. All right. So let's see. Other than that, going back, Ron, I'm also glad you showed the dates and the times. But we had a great question from, it wasn't Andrew. Let me find it here. John. John says he'll be away on vacation during the part of the course. So a lot of things come up from that. His specific question, is there a way to watch the sessions after he returns from vacation?
Yes, you would have at least a year to go through all the sessions. So you'll have access to them for a year. But yeah, we already have what we call the master copies of the modules out there for you. So you can watch those anytime you want. Those are already uploaded, and you can watch the master recordings, we call them. So you can, yeah, you don't have a problem.
John says, great to know, or good to know, he says. Thank you for typing that question in, John. We did have a question from two other people. I'm going to swing back to those. And as far as account size, and you and I go back and forth on this one, on how the best way to say it. Not that you and I go back and forth, but as far as like you and I think the same as far as saying it to everybody else. But the person who typed it in the chat box actually specifically said, what's the minimum and what is recommended? And I said that I would ask you in the Q&A. So here you go, Ron.
All right, no problem. Now, in true honesty, the minimum really is only $5,000. That's it. That's all you really have to put up to make this thing work, okay? Now, I want you to be realistic. I don't want you to think that, all right, I'm going to open up a $5,000 account. I make $20,000 a month. No. Give you an example. We opened up our income challenge, and we did 5 trades, right? We had 5 winning trades. With a $5,000 account, you made like 700 and some bucks, right? A 17% return in 5 weeks. That's the kind of returns that you would, in a perfect world expect, where you can make $200-300 a month, 3, 4, 5% return. You're not going to place a trade with a $5,000 account and make $3,000 on a trade. To do that, you have to risk a ton of money, and we are very, very aggressive with our portfolio management. The way you make money in this business is you keep your money. So don't risk it. Don't try to make those home runs. Hit those singles. Now, you can do an S&P trade like that SPX Paycheck with a $5,000 account. It's awesome. It works great. Work that with $5,000. When you get more money to put into it, awesome. You can open the door to other things. Now, if you do have a little bit of cash that set aside and say, okay, I can do this, I would say a good base amount would be like $25,000. $25,000 lets you do an SPX trade with a couple contracts. Then you can do some stock trades to kind of supplement it. It opens the door to a lot more. And here's kind of the idea, right? So I'll give you guys results from my trading last year that we did in my URS class. Last year, we did 63% return, okay? Like 33% of that was the S&P, and the other 30% of that was stocks. So even if you have a $5,000 account and you're only trading the S&P, that still opens the door to a lot of income. When you have more money to put at this thing and you have that 15, 20, 25, then you can start adding stocks and you can start even drawing more income. So like I said, $5,000 can get you started legitimately with one trade a week, one S&P 500 contract. You can go all the way up to $400,000 or $500,000 before the system kind of maxes out because of option liquidity. And 25 is a nice starting point if you want to just throw something at it to kind of get it started.
All right, very good. Now, so I hesitate to say this because there was a gentleman earlier who asked about Brian it was one of the case studies. I don't know if you remember that one. It was way back at the beginning. The gentleman who had made like 20 something thousand. I think it was 23,000. So he said, how much did Brian start with? And I didn't know off the top of my head, Ron. I went back into our archives of the letter that Brian wrote to us. And I was surprised. I'll just quote what Brian wrote to us. He said, when I started the Options Paycheck training, I opened a separate trading account just for spreads. I used my TD Ameritrade account and deposited $6,000 in it. I do one thing different than Ron taught me. I usually have 3 SPX trades going on at all times. And so that's a little bit, like you said, he's breaking the rules that you would advise. but he was a lot more active. But he started with a smaller account. But if you just did one trade per week, if you just divide 20-something thousand by 3, and you're making $5,000-$6,000 in, or $7,000 in the same amount of several months, I think that's a very nice return on investment.
Yeah.
Now, Ron, Steven wants to know, how long are these classes?
Good question. So the classes are usually, the live classes like the mastery class and the live module, they're usually 60 to 90 minutes long. So I always tell people, give yourselves about 3 to 4 hours a week to go through the material and also do any, I call them assignments. It's not like you have to turn in homework or anything like that. But I said earlier, we want to be quick to implement. So every module, I give you guys kind of assignments to do, making sure you're kind of implementing what we're teaching. So between the 60 to 90 minute live classes, if you give yourself 3-4 hours a week, you'll be able to get through all of the material.
All right. Since you mentioned the homework, one question that comes up is, what kind of help do people get, like for the homework and anything else that they might have questions about? I mean, there's a lot of modules in here. It's a several week class. Are they kind of on their own, or what kind of help can they expect during the course, and also afterwards? Is there help that they can get after the course ends?
Absolutely. First, I'll start with kind of like the self-help, if you will. I probably have 50 plus videos that you can look at that are like FAQ videos. I have an assignment walkthrough video that will walk you through every part of the assignments. It's kind of like an open book homework, right? I have PDFs that you can download that will walk you through each of the assignments. So there's a lot of self-help up there in our university site. That's only one part. The second part is how to actually get a hold of us. Well, there's 3 ways that you can easily work with us. Number 1, you have access to us from the Q&A sessions of the live course. You have the mastery sessions. We also have a special email that is given to our Options Paycheck students that goes right to me and my support team. And I'm not talking, you're not going to VectorVest support, nothing wrong with VectorVest support, but you're going right to the 3 or 4 people who can specifically answer your questions without getting divvied out to a different person. So you'll have instant access to us. We also have that Facebook group. So between all of those things, you've got a lot of ways to get help and get support in this.
All right. I love this one from Scott. Scott's like, do I need to be a mathematics genius to take this course?
You don't need to know math at all. Not at all. I'm not bad at math. I'm bad at arithmetic, I always say. I'm good at high-level math, but now you don't really need to know math because it doesn't matter what software you use, what broker you use. Honestly, they do all the math for you, so it's pretty easy.
And there's even a little spreadsheet that we give everybody in the course to help them with position sizing. They just have to type in a couple of numbers, and it says, all right, well, this is how many contracts you should do.
Yeah, I forgot about that. You're right.
All right, so next up is, I saw a question from somebody about a retirement account. Mm-hmm. Can you do these trades in a retirement account?
Yes, most of you can. I know in Canada they have like an RRSP. You cannot do that in that. But most U.S. Retirement accounts, like an IRA, not a 401k, it's a little bit different, but an IRA, you can do this in most IRAs. Now, I always have, over the course of the years, I've always had this customer call me, random, say, hey, Ron, I couldn't do it in my IRA, so I couldn't do it. I said, okay, no problem. Call your broker first. Whoever's got your IRA, call them and make sure that you can do these type of trades. They are called vertical credit spreads. Most brokers don't have a problem with it because they're limited risk and they're fixed risk trades. So double check, but the majority of IRAs I have come across will allow you to do these trades.
All right, and it just says R is your first name. I can answer this one. The bonus that you get for the course is you get access to the Options Pro software during the length of the course. So basically till I think Christmas is actually the last day. That way you could use it side by side with your broker. So we'll give you, during the course, Ron makes videos on how to do things with the Options Pro. And several times throughout the course, there's videos that you'll find where showing you how to do things with different brokers. All right, and actually, Thinkorswim is probably the most common one that, especially on our Facebook alumni group for this course, there's a lot of thinkorswim people who actually have written some searches and things to do things inside of that broker. But to answer your quick question, is that you have access to Options Pro for the length of the course until the end of December.
I feel thinkorswim should pay me money. I've probably sent them a lot of business over the years.
All right, so let's see. We already answered that. How long the courses are. What about the one? Especially for people who are either new to options or when we're answering questions about account size, about how long does it take for people to actually start to see results, and whether it be their first winning trade or their first trade, or like when can they start to actually see the results of their hard work in the course?
Statistically, and based on probability, you really should start seeing results in the first 45 days. I don't want to say you're going to start seeing results in the first 3 days, but remember, on average, you're going to be placing winning trades at a rate of 70%. You might have a streak of losers to start, but you got to remember that there's going to be ups and downs, but in the long haul, the big scheme of things, 3% per month. Now, that may mean on month 1, you make 7%, or it may mean in month 1, you break even. But the big thing about this is it's not about the results, it's about the process. Keep the process going, because as long as you keep the process going, you will see the results. As much as I would love to tell you, on January 1st, your account is going to start moving like this. That's not real. That's fictitious. That's fake. What's going to happen is you're going to have this, you're going to have some of 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 this, maybe some of this, maybe some of this, maybe some of this, maybe some of this. And then, you're going to have areas where you're winning, then you might have some drawdown. You may have some areas where you're not making any money, but you're just treading water. But over the long haul, you end up at this approach right here. Okay? You end up at this approach right here. I always looked at it as like a map, right? If I want to drive from Cleveland to Cincinnati, right? I don't drive straight through. I have to drive south and go through Columbus. I have to come over this way and go through Dayton, and then I get to Cincinnati. It's not always a straight line. There's always twists and curves along the way. So give it at least 45 days. You're going to start seeing results, if not right away.
All right. And Terrence, I wrote a response to in the chat box. Hopefully you see that. Just give me a little note in the chat box that you got it. And other than that, Ron, I think unless somebody types in a question right now very quickly, I think we're able to start to wrap things up. But folks, this is one of those courses, as Ron said, it's one of those days in your life where you're like, this could really change things for you. Like Ron had that note from Joe saying, basically a year ago, last fall, he made the decision to invest in it. And it was like a $100,000 decision for him. It's one of those things, hey, if you put in the work, I mean, we're not going to be like the government, and we're not just going to send you checks in the mail. Ron is not going to be your paycheck. So it's not the Options Paycheck where we send you checks. I mean, you actually got to do the work, but if you put in the work, you'll see the results, right? And I was talking to somebody else in the chat box earlier. He had some winning trades and some losing trades, and it's like, oh, I had some losing trades. Should I get a refund? Actually, I'm going to address that to you, Ron, before we wrap things up. Somebody says, oh, I had some winners, I had some losers, but can I get a refund for that? And when somebody says, hey, this system, I had some losing trades, and they're like, oh, I should give up and get my money back because I had a loser. What's your initial reaction to something like that?
My initial reaction, well, I can't talk about my initial reaction, but no, I'm just kidding. In all seriousness, and when I see something like that, I really want to just say, don't trade at all. Because, I look back at my own history, and my first year and a half, almost 2 years, were filled with nothing but failure. And it wasn't me that was failing. The system may have been part of that problem. Maybe it was my way of using the system, but, you just can't give up. I hate to say this, but you ever been to a trade show like investors seminars and all that kind of stuff? Those trade shows are filled with people that are looking for the next best thing. Why? Because they started a system, maybe they didn't understand it, or maybe the system just started out where it didn't have success right off the bat, right? Because they're looking for the next best thing. They're going to give it a couple of days, see if it wins some trades, and then go on to the next best thing. And they're never going to be satisfied because they never give something enough time to work. You know, I want to go back real quick because I have the slide here. It's the easiest one I can show you guys. I want to go back to all the way in the beginning because this is a good way to answer this question. I want you to look at Bobby's results, right? Remember Bobby? Now, here's the good part about trading, right? Bobby took and made almost $30,000 in a matter of like a year and 2 months, right? Remember how I told you it's not about this. It's never a straight line. It's always going to be a curved route to get there. All right. Now, this is why I love this industry. I love trading.
Well, hey, Ron.
Yeah,
I think
ahead.
your screen it's not showing. Sorry.
Uh-oh, why not?
Is it paused?
Let me try that again. Sorry.
There you go.
Give me 1 second here.
You got it. It's showing now.
Okay. I was just hitting a button to see why it paused. Anyway, okay. So, Bobby, of course, we all know made $30,000 in like a year and 2 months, right? But understand how he got there. He made $17,000 and he dropped down to 11. Then he went from 11 to 23 and dropped back down to, let's call it 17. Then he went from 17 to 30. Now, here's the problem. The problem is, what happens if you didn't get the beauty that Bobby did? There are times when you might start your trading here and do something like this and maybe even this. And then over the course of 3 months, you're like, oh, come on, the system doesn't work at all and I'm not seeing the returns I thought I was. So you quit. And then what happens? You miss this. Okay? See, as much as I would love to tell you that turn the switch and you're going to be trading and making a lot of money, okay? There's an element of timing to this. Sometimes you get into trading where the timing may be the market's in a transition and you don't take a bunch of winning trades up front. You have a couple of losers. Then you rattle off 21 winners in a row like you saw some of the guys tonight. Or you get started like our options income class did 5 weeks ago when we rattled off 5 winning trades. You know, there's always that element of market timing that we don't control. You know, the market's going up and all of a sudden we start doing our income trading and the market does this. And we see 50-50 results. Or we start getting in, the market does this, and that leaves us with a bunch of losers up front before we can get into that downtrend and start making the money. That's real life. That's how trading works. You know, I always tell the story of, of Bernie Madoff, right? What was the big reason that Harry Markopolos busted Bernie Madoff? Because he looked at his results, and his results were like this. And Markopolos, who was a quant analyst and a math genius, right? He looked at that, he said, that's impossible. It doesn't work that way. Nothing can ever do that. That's completely fictitious and BS. So he started digging a little bit even deeper into it. But, that's what you can expect. That's the kind of stuff. As much as I want you guys all to start here, sometimes you might start here. Okay? Sometimes you might start here or start here. It just depends. But the cool thing is, the way we use risk, the way we analyze our things, you're never going to have a thing where it just goes down like this. That's not going to happen either. That's the beauty of this. Brian, that was really long, but do you think that helps make sense? That's real, that's real stuff.
Yeah, I think so. And if anybody has any questions, just please let us know in the chat. But I think we can start to wrap things up. For me, I think you'd be making a great decision. This is definitely an investment. You don't wake up every morning thinking, I'm going to spend $995, right? You say, well, this is going to be an investment. And as you saw today, a lot of people, tons and tons of people who've seen that investment, pay itself back in months, years. You've now got a system that's going to benefit you for the rest of your life. All right. So with that, Ron, I'm excited to be part of this. Class starts actually this week, isn't it? Your first class?
On Thursday.
First live class starts this week. And I'm just going to turn it over to you, Ron, so you can say whatever you want to wrap things up for the night.
Okay. Now, the first thing I'm going to say is, unlike Brian, I am the kind of guy that wakes up in the morning thinking of how I can spend $900. It's a problem, and I'm working on it. I like to shop. Retail therapy is good for me. It makes me happy. It releases in my endorphins. I do shop too much. Anyway.
Well, Ron, I could give you my Amazon wish list if you really have a problem.
And that's the problem with Amazon, quite frankly. They make it so easy. I mean, they like yesterday I bought like propane tank gauges. And don't get me wrong, it was nice to have that because now I know how much my propane tank is full. That's pretty cool. But it's like I just buy. I mean, I spend a lot of money, but I buy stuff like that. But anyway, thanks everyone. I really appreciate this last hour and a half with me. I hope you guys enjoyed it. I always try to add a little bit of a personal touch into these classes that I do, so I'm not reading off of a script. One of the things that I pride myself on is realism. I try not to be unrealistic. I show you winning trades. I'm going to show you losing trades over the next 7 weeks. I'm going to show you the good. I'm going to show you the bad because I want you to do this and I want you to really commit to it because I know if you do, the success is there. I really do. So thank you all again. I want you all to have a great evening. Have a great rest of your year. Have a very profitable 2022. If you spend the next 7 weeks with me, you're going to have a much better chance of having a better 2022. So thank you all very much for the last hour and a half. I'll bid you all a fine good evening, and we'll see you all again next time. Take care, everyone.